is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom. How you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 3 p.m. Eastern Time. We got about 53 minutes left to go in the trading day. And on CPI Tuesday, the market's giving it up a bit. And we're right at the lows you were at about 10:30 this morning. We'll jump into some of the volume. Right now, you got S&Ps down by about 1/3%. We're trading at 69.90. NASDAQ 100 off a similar 0.4%, 25,859. The Dow off 0.8%. JP Morgan trading lower. Banks kicking off earnings, and the Russell in the green by 2 points. Let's jump over to JP Morgan, actually. How about this one? Okay, down 4.1% right now. AXP was American Express. Not as bad. Okay, we jump around to some of those credit card companies, slightly in the red, but we'll get into JP Morgan earnings. Jump over to Goldman, off 1.25%. Morgan Stanley, off 2.2%. The bank's kicking off earnings, and not in a good way. Quite a reaction to those JP Morgan numbers. You see the escalation, and we are at session lows right now. It's been a negative action day for JP Morgan, off by 4.1%. And we get down to yields. So Fed in focus. There's your 8:30 volatility. Inflation comes in under estimates. Now, some of the reason why you're coming in under estimates is because of a lack of data during the government shutdown. You're comparing some of the data to prior data you don't have, so they're just carrying forward the same numbers, showing 0% growth or price appreciation in some of those. But here's the thing. Where that's happening the most, okay, and let's jump over to the headline. We got core CPI rising 2%. Economists expect inflation to ease gradually, okay? Now, where this came in, where did I just have it? I was down a bit. Forgive me. But one of the things that's happening here is housing, of course, okay? And I talked about it this morning. Housing is a huge component of CPI, not as big of a component of PCE. Nonetheless, we get a light inflation number, and the market says we're trading to higher price, lower yield on the 10-year. We're at about 4.17. Now, all things considered, we've just been chopping around for about the last month, right where we are right now, sitting at 4.17% of the 10-year. The dollar right now, just under 100, 99.12. Quite a little bounce from the lows of December, when we were hitting 97.74. We're now above 99. And yeah, let's jump back to that CPI number. So headline numbers, okay, we're talking about headline, 0.3% for the month and 2.7% for the year. On a core basis, 0.2% for the month and 2.6%. Shelter prices advanced 0.4% in December, the most since August. If you exclude shelter, the core CPI only climbed 0.1%. Key housing metrics, including primary rents and owner's equivalent rent, rose at a firm pace even after the changes recorded from September to November were surprisingly small. But one of the things happening here is the government shutdown. You had a decline in appliances as well. That one. Here we go. Economists said that the data was artificially depressed by the record-long government shutdown because the BLS could not collect prices in October and assumed no increases in key housing metrics. November data were also collected later than usual and could have been affected by the holiday season. So there's still a little bit of cloudy nature in some of that data. But either way, it's a light number, man. You march forward to a Fed. Now, we get a Fed 15 days from right now, all right? You jump to the Fed futures, and you're talking about, as of right now, 97% chance they're doing nothing, folks. Okay, that's what the market's pricing in for their January 28th meeting. 97% chance that they're going to stay where they are right now, 3.5 to 3.75%. You jump to March, they're still there. Almost a 3-to-1 chance that they're not moving. You go to April, Powell's final meeting, market still thinks 60% chance they're there. Things get interesting in June. That's when you get the first cut priced in, 48% chance, and that'll be under a new Fed chair. New Fed chair takes over in May, and their first meeting will be in June, and they will have 5 meetings throughout the year. Yeah, we'll talk the credit cards in a moment. Talk to the CPI. Yeah, and the inflation numbers. So let's talk about the credit cards. They say everything's on the table. I mean, amazing these banks have to come out with the earnings right now, right? Now, JP Morgan, they were one of the ones hit yesterday when the call for the 10% cap threatens to significantly change its business and would harm the bank and customers. Be very bad for consumers and the economy. That's the CFO saying, okay? And of course it would significantly change. I mean, I talked about it yesterday. Way too much uncertainty about the proposal. It's always in the details. But it's just not feasible. When you think about, if you're going to loan money at 10%, why would you ever loan money on a credit card at 10% when you can loan money in a much more secured fashion at 7 to 8%, right? Mortgages, they're handing out. In terms of securing that level versus credit card debt, sometimes that just goes bye-bye. Credit cards, $247.8 billion. Talk about a loan shark, man. $250 billion. JP Morgan in the credit card business, man. Wow. $7.28 billion in 90 days on those credit cards. Oh, man. 5% increase in the bank's credit card services and auto businesses in the last 3 months of the year. That is quite a number. And that business would dry up sharply. And it's one thing if the government's going to subsidize those at some point, but if they're not going to be subsidized and they can only charge 10%, they're just not going to offer that type of a service, period. But yeah, they got more going on. We'll get into JP Morgan numbers later in the program. But how about making almost $100 billion in net interest income for a fiscal year? Whoo! But guess what? It's time to come into these valuations. You check out these banks. It's been a heck of a run, man. Okay. JP Morgan, April lows, 200 to 337. We take a look at the volume on this equity on a weekly basis. Let's jump this off here. Yeah, the holiday weeks you drifted a little higher. Volume's decent. You had some nice volume that week of December 8th. That's where we're at right now. 63 million shares. JP Morgan down by 4% right now. S&P's off by 29. All right, folks, stay tuned. We're coming back with our man Basil Chapman. Don't go away.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. S&P's right now negative by about 29 points. And as we do each and every 3:15 p.m. Eastern Time on Tuesdays, folks, we're going to talk to our man, Basil Chapman. You can listen to Basil's outstanding program, folks, the Tiger Technicians Hour, every morning, Monday through Friday, 10 a.m. to 11 a.m. Eastern Time. And check out his daily newsletter, The Opening Call. You head over to the newsletter tab at TFNN, folks. You'll see that opening call right there. Basil just put together a great webinar. You can check that out. The archive of that webinar is available for all subscribers. It comes with a 30-day money-back guarantee, folks. You sign up for the month, you gain access to the newsletter. The webinars, it's $149, and you get a 30-day money-back guarantee. The webinars are tremendous, and he just did one in the last month. You can check that out. Basil Chapman, good afternoon.
Good afternoon, Tommy. How are you?
I'm doing well, man. We got quite a little market here, Basil. Pretty remarkable. You know, there's a lot going on, and S&P's all-time highs, right? Dow right there as well. We'll talk about it. Boy, the metal market. What are you looking at most in this market, Basil? We got a lot going on.
Yeah, there's a lot going on. Very short term over the last couple of days, even though a lot of our positions have been at all-time highs. I said to subscribers, we've got to be a little careful. The market's a little too nonchalant. There is the tariff news coming out tomorrow. It could actually have a little shaking to the market, but what I am looking at is this. In the Dow, today we took off before the market opened, before this 400-point decline, we took a little bit off the added on position that we've got from our core positions. We added another position to the Dow on the long side back on the 24th of November. Took a little bit off here because I'll tell you why. I've got this as a peak, with a chance today that we've got what I call a Chapman wave 2-bar reversal. I'll talk about that more tomorrow in my show, The Tiger Technicians Hour. Basically, it's a fractional high either on the left side or the very next bar has a fractional lower high. It's just they are so close, and then the market turns down. It's almost like a little mini double top. So I'm watching that closely. If you see it, you can see it here in the S&P. Look, 6986.33 was the high yesterday. Today is 6985, just a tad under. I'm watching that closely. The long position we have in the IWM, we still have here. It is at an all-time high, leg D. And in D, I started to get a little cautious. The other thing is this. And to me, this is going to be quite fascinating. In the positions that we have, we've still got Alcoa. I mean, you spoke about the webinar, what I was speaking about in the webinar are positions we added. We've got long positions that are in sectors that would hardly ever discussed as really very important to the market. Everyone's talking about high tech. Alcoa is certainly not high-tech, although I'm sure they use high-tech. This is acting very well, all-time high today. General Electric has done very well. We added to that position recently. And here it is, a little bit off the all-time high. General Motors, I mean, these are the old names, General Motors. And funnily enough, none of them really are Dow stocks. They're not in the Dow anymore. They used to be, they're not. So what I'm looking at here is within the context of a possible, just a short-term trend change. The longer term, remember I spoke about the monthly charts. The monthly charts are basically, look at this, here's the Dow still in a leg A to the upside. It means it should still go to a peak A. That means a month that it pulls back without a new high, then a leg B, and then a peak B, then a leg. So this takes you to mid-year before you make some kind of a peak D potential top. But I was also looking at this inside channel, and I said every time prices get into that, they pull back quite sharply. So it's just kind of a little bit of a warning sign to me to say, hey, you might have some positions that are doing well, but you got to be prepared. And we've raised a little cash to be able to put to work because we'd like to add to some of our positions that have done very well. What I want you to show you is that the XLF, which is always very important to me. Look at that pullback. There's a Chapman wave 2-bar reversal at that all-time high, at that peak E. And it's pulling back from the 56 areas, trading at 54. Not a big deal, but look at that inside track repellent zone in the weekly chart. So I've spoken to you very often. I've shown this particular chart right here, that this is an incredible coincidence in the monthly charts, how the monthly pink 9-period exponential, XLF, select financial ETF. This is a monthly chart. Each one of these bars is a month. Coincides exactly with the highs and lows of the SPY 500 fund. So I'm watching to see whether or not they take out last month's low, because that'll be important to me, because I like to think that when the financials are doing well, that's usually very good for the market. Now, here's something that's really important. Let me get to this chart right here. So within the context of rotation, I'm looking at this and I'm saying, I had a EUR USD. Look at this. This is the Japanese. Oops. No, that's the euro. Why am I doing that? USD JPY. USD JPY currency pair. Look at this. Screaming to this huge. Look at this monthly chart. Weekly chart first. The weekly chart has this big cup formation, and it's breaking out, going towards highs that were made back in 2024. Look at the monthly chart. Very strong. Look at the dollar. The dollar suddenly finding some strength. So when I see this, I say, okay, the dollar's acting okay. It's not great, but it is moving towards the upside. So I thought, all right, we are still holding our Bitcoin from some time ago. If there's some kind of a rotation, then you need to be watching Bitcoin. I mentioned yesterday, I mentioned it again today in my show. Look at Bitcoin. It's up 3,095. This is the first time you've got a really strong candle going towards this rectangle resistance area. If Bitcoin goes to 95,700, that's a breakout. So I'm looking at this, I'm saying, maybe it's just time for a little bit of a pullback. Tomorrow we'll be looking closer at the gold and silver. But here's another thing. Look at the VIX index. The VIX index, for the very first time, has seen the 9-period moving average go green, and it's been pink since it broke down back in end of November after the big 28.27 spike on the 28th of November. So I'm watching that very closely, because if the VIX happens to go to the 14-period the 200-period moving average at 17.58, we could see the Dow, which is down 444, have another spill coming up in the next couple of days. So I'm looking at the rotation through the different areas. I'd mentioned to you some time ago that Robin Hood, I think, is getting closer and closer to being tied towards the Bitcoin relationship. And look, finally it's moving up, but we're still long, and we've added to our long position. This is at 120.37 of 286. If Bitcoin actually gets to 124 by Friday or Monday, together with the Bitcoin, finally we could see a rally that's sustained in that particular area. I happen to tie the two together. I don't know if they are, but I've linked them quite well before. Let's see if it works this time. And one other aspect towards all these different, the rotation through the different sectors is, I don't yet see you mentioned Caterpillar. I think someone mentioned Caterpillar. Look at this all-time high in Caterpillar. So the heavy-duty equipment, the deep cyclicals, the industrials are holding very well. Looking out, that is really positive. So I think on a very short-term basis, I'm looking at this and I'm just saying, you got to be a little careful here. Right at the open today, before the open, we actually took some profits in that short-term trade in the Dow. We've still got our core positions. We're still only long. We're waiting to see. There's a stock that we were looking at that we actually owned from the 22s. It ran up to the 70s, pulled back, and we still like it a lot. And that's Iran. That's the energy. This is generates data generation center, renewable energy, GPUs. So we're still looking at the long side, but I might be adding a short position tomorrow.
Folks, get in that opening call. Great trade on that Dow, Basil. Great stuff. Appreciate the update as always. Check out that Tiger Technicians Hour tomorrow. Basil, have a great one, man. We'll be listening tomorrow. Thanks so much.
Thank you very much, Tommy.
Thank you. We'll be right back.
Trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back, folks. We got the S&Ps negative by about 0.5%. We're at almost session lows, off about 33 points. And right now, folks, we're going to jump over to Tim Ord. We talk to Tim every Tuesday and Thursday at 3:30 Eastern Time. You can reach Tim at his website, ord-oracle.com. And at TFNN, under the Services tab, he's got a couple great webinars, folks. The 6 secret ratios every trader should know. We talk about some of those ratios on these interviews with Tim. And the secret science of market tops, how to identify market tops. Both those webinars, you buy them. They're available on your members page forever. You watch them as many times as you'd like. Tim Orr, good afternoon.
Good afternoon. So
God, what do you think about this market, man? I see the SPX chart up there, and we're hitting some highs, and we got a little action. Talk to us, please.
Yeah, all right. This is the bottom window is it's actually a 3-month average of the SPX VIX ratio, so it's a moving average. What I did kind of slowed down that moving average to actually look at a real big picture. So the 1-day average of the SPX VIX ratio is actually showing a bearish divergence, but the reason why I'm using a 3-month average, again, it slows things down. And what it's designed to do is is to help identify bigger tops that can be 10% or more. I'm not really worried about a 2 to 3% pullback, but 10% pullback, that concerns me, and so that's the reason why I slowed everything down on a 3-day average or a 3-month average. But right now, if you can see here, we're kind of just making higher highs. As long as the SP is making higher highs, that suggests we can have a short-term pullback, but it won't be anywhere near 10%. So if you look at all the other divergence, the one back in late 2021, the market I think went down close to 30% that time. This one right here really didn't show up at all. This one back in 2024 started to get a divergence in June, and finally we did get the pullback in early 2025. I think that was, 15% or better. So then one back, and here's a COVID crash back here. That was probably 30 or 40% pullback. But right now, we can have a short-term pullback, but this chart suggests it won't be anything near 10%. That's my take on that. And now let's flip to kind of the short-term where we are. Again, panic's important in the market. You only form panic when you're basically near lows. And that's only where panic forms. And panic can actually happen in an uptrend, and that's exactly what we're having right now. The market's been kind of inching up here, and the bottom window is the 3-day trend. Next window up is a 2-day trend. This is a 5-day trend, and the top window is a 10-day trend. Obviously, the 10-day average of the trend is more important than a 3-day average of the trend because it takes in a longer time frame. And the 10-day trend, it's not bad. It's 1.2, but it's going up. But over the last several days here, over the last couple of weeks, the markets have been moving up, and the trend closes have been pushing the 1-day or the 2-day and the 3-day trend up into bullish territory. The 5-day is not there, but it might be there today. Because last time I looked, the trend was around 1.3 intraday. The market hasn't closed yet, but this is bullish. So I put it in pink areas where at least the 2 and 3-day trend were bullish. Sometimes all of them were bullish, but at least the 2 or 3-day trend was bullish. And we're kind of in that region right now. So the market's actually been going up, and the 2 and 3-day trend is kind of keeping pace and pushing in bullish territory. So in a nutshell, I don't see a top here. If you look at this is kind of a different way to look at the trend, but I labeled in blue here the trend closes. Yesterday we had 1.24. The day before that we had 1.24. A couple of 3 days ago, I think it was 1.45. Anyhow, the last 7 days, 4 of those days, trends were near 1.2 or higher. And so as the market's going up, the trend's going up with it. That's going to continue. Normally, you have to worry when the trend gets up around, the 10-day trend gets it down around 0.9 or below. That shows kind of a euphoria type thing, and that a lot of times comes near highs. And we're not even having that near high here. So S&P so far look very good. I labeled this pink area right here all the trend readings of 1.2 or higher. And they all come in eyeballing it here between, I don't know, 656 to 680. This is a big support area. So if we pull back, it does suggest that pullback might be minor because we got too much panic in the market. So panic's bullish. So how high is high? Don't know. I'm staying long, even though Mark's pulling back today. We got a trend last time I looked, 1.3. So I don't see any top of any consequence. If it does pull back, it's going to go right back up again. So it's bullish.
And I appreciate it. And, I was thinking of you this morning early. Now, we've changed. The VIX at 1645 right now, but we had a VIX with a 14 handle this morning. Now, that's, off the, but that, as in.
On the open, whether? I didn't see that. Was it on the open then?
Yes, right on the open, and then it kind of shot up to 1575, but it was literally right at the 9:30 open. You got a 1498 VIX. I said, man, 1498 VIX. No one's worried about anything. What's getting in the way of this market? And we got a little pullback, but in that same regard, still at 1645 right now on the VIX. Not a lot of, I know you talk about the, one of those ratios in that webinar that you did that's fantastic, of course, is the SPY VIX, and yeah, I mean, we're still at a relatively low VIX. What do you think about that action?
The VIX thing going on right now?
Yeah, just in terms of where we are with the VIX, with the SPY VIX. Let's talk about that then. Do you have that ratio by chance, or what do you think about it?
The daily is showing a little bit of divergence here going on. But the trend, the panic actually rules the VIX, I guess you might say. Okay. Between the two, I'd pick the trend readings because you're just not going to have a top of any meaningful duration, I guess you might say, until you get that 10-day trend gets down around 0.9 or lower. Then you can get a pullback. We're not anywhere near that. The 10 days coming in 1.12. But I did see the daily SPX VIX ratio where we're hitting new highs, and dailies are not hitting new highs. But that can go on for 30 days.
Okay.
So I kind of switched to short term. I'm watching the daily. The monthlies look fine. But, a 5% pullback could happen maybe in September. I don't think it's going to happen in January. Not September, but February. But I don't think anything's going to happen here in January. January so far it looks pretty good. So I think we're just going to keep pushing higher here.
All right. Are we going to talk some metals when we come back?
We are.
All right, man. So, how about it? Silver hitting $89 today, $89.21. We backed off a bit. We'll talk some gold and silver. We're coming back with Tim, folks. Stay tuned. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Apologies, Tim. For some reason, I muted myself. We're back, folks. I was saying we got gold and silver. Tim ringing that bell for all-time highs today. And silver, quite a run, almost $90. Backing off a bit from those highs, but please, go for it. That's quite a chart. You've been on the ball, man, with this gold and silver and the ratios. Please talk to us, Tim.
All right. This is, we've been looking at the XAU to NDX. This is the HUI NDX. Kind of shows a similar pattern. There's potential a 12-year cycle going on right now. That cycle started in 2024. That cycle pans out. We're going to go into to 2036 on this cycle. There's a lot of similarities going on here, but we have initiation of an uptrend, they call it. That's when it's a big surge off of a significant low. And, you know, we created a low actually for several years there, going from 2014 to 2024, and we finally broke out of that sideways trading range. And now the RSI of the monthly HUI index ratio got up around 70. We're at almost 74 right now. And so we're smoking here. Last time the RSI got this high was back in 2008. So this is a real unusual, or this signal is extremely important, I guess you might say. It doesn't happen very often, but when it does, you have to pay attention. But previous times, when you get up around the 70 range, I pointed this out. This is off the 2000 low, where actually your dad and me had a great time riding this rally up. And we got the same thing going on right now, I think. We may see a consolidation. Last time the RSI of this ratio, monthly ratio, got up around the 70 range. It went sideways for several months before it went up again. Went sideways several months, up again. This is the COVID crash right here. So okay. Nothing predicted that. But finally, anyhow, we may see a consolidation.
The financial crash, right? Like 2008 or whatever?
Yeah. Oh yeah, you're right. This is 2008. That wasn't COVID crash. That was So anyhow, but anyhow, everything came back, hit new highs. So I think we got a long ways to go. This pattern, this HUI monthly HUI NDX. This is what this ratio is right here. Could be a falling wedge. And if it's falling wedge, they predict to go back to the top where the falling wedge began, which is way up here. So anyhow, I'm predicting, according to this chart anyhow, HUI will outperform the NDX. Also, I think XAU will outperform the NDX. I think the gold stocks is a place to be, according to this chart, for probably the next 10 years. So,
hey, let me ask you, because I know I've asked this before, because it's the index with the HUI over the NDX, and correct me if I'm wrong, but you don't necessarily you're not looking for the NDX to decline for that ratio to increase. You're looking for the HUI to increase, basically. What do you see? Do you see the NDX pulling back over that time? Because that
could, ratio, that could jack up the ratio as well. But I think I've asked you that before, and you're looking at the HUI side. Or how do you look at that?
Well, actually, what I'm saying is gold stocks will outperform the NDX stocks. In other words, NDX goes up 10% this year.
Sure.
This chart suggests HUI will go up more than 10%, maybe 12%, maybe 15%, maybe 20%. So what I'm saying is, of all the indexes right now, the gold index is one of the hot ones to be in. And I'm actually, how I'm kind of running my portfolio, I'm kind of selling the big winners and actually going down to the second tiers. And because this is still early in the bull market, and a lot of these monthly charts are just coming off the bottoms. And the ones that have been running, they've been running since 2024. So we're starting the second year of that run. So some of those are going to start consolidating, flip sideways or whatever. Probably not decline much, because once these come off the bottoms like this, there's usually no test of the bottom. That's all been done. The worst case scenario is probably, a lot of these will correct maybe 30%, and that'd be it. I don't think 50% is going to be in the. They're not going to let you in cheap. If you're not in, they're not going to pull back and get a good buy.
I agree. And I say it like that quick, as in we're not going back to that world, man. As in, right, metals were underpriced. We see it now, right? The price of everything else, the acceleration. I agree on that one for sure. Yeah.
Yeah, everybody hated him. He brought him up over the last couple of years. They kind of looked at you, the Looney Tune. So, now that's over. Now they're starting to pay attention. We haven't reached. People are kind of accepting the idea that these gold stocks are starting to go. But now they're saying, well, it's too high to buy here. Well, they're going to get higher. So,
I mean, at the beginning of that run last year, we were near 2,000. And, you had highs near 2,000 almost 13, 14 years prior when it made that run up to 1,800. So pretty remarkable you went that far. And then, of course, it did it at that time when we had all the inflation through that period of time as well. And you were still stuck at like 2,000, right?
Yeah.
So, yeah.
So here's another chart. This is the XAU to SPX. So the previous one is HUI to NDX. So that's the gold stocks against the QQQ. And now we got the XAU against the SPY. I wanted to see what was going on there. And the more times you test a high, goes back 2016, we kind of test that area. We tested it again. And it looks like now, are we breaking out here? Because we're above the 0.05 region. And, the next stop could be way up here. Which is, that's actually 300% up from where we are. Take that 0.05 times 3, you come up with 0.015. That would imply this ratio will go up 300%. So if that means, I don't know, it's really hard to contemplate what these gold stocks are going to do over the next several years. But all these charts, even on the SP charts, compared to the gold stocks are breaking out to the upside. The only thing to worry about, where does the next consolidation begin? So I had these couple of charts here. The last time, the bottom window is actually, for some reason, works a lot better than the one above. But the bottom window is the 50-day average of the up-down volume for GDX. The next one higher is the 50-day average of the advanced decline for GDX. So this is the stocks in the ETF of GDX. And last time it got this high was back in 2019. The bottom window, which is the up-down volume, 50-day average, got anywhere close to 30. Well, we hit close to 35 here. And that's the initiation of an uptrend. I keep talking about that, but that's really important. When you think they get overbought, they're going to correct. They don't. They actually flip, keep going up, or if not flip sideways. But last time they got up this high, the market kept going for another 12 months. Now, this is the COVID crash right there. That's that March 2000 pullback. But in general, it went straight down, straight back up again.
Yeah.
Will we have another COVID crash? I don't know. Maybe. If it does, you buy it. But anyhow, 12 months? Well, you start 12 months from October. It takes us in 12 months of 2026 October. So I'm thinking there's a good chance this rally could persist here until October of this year.
Pretty remarkable stuff, man. Every day, every time I talk to you, it's like we got new levels, new highs. You've had some great calls. Appreciate the time as always, Tim. Look forward to talking to you on Thursday, all right?
You want to
Okay, thanks so much. We'll come right back, folks.
All right.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Markets clawing back some of those losses. You jump into the S&Ps. We were all the way down to 69. Let's get it, 69.76, and we're up 20 points from there. You're right back to where we were at about 1 p.m. Eastern Time. Markets catch a little bit of a bid coming into the closing bell. NASDAQ, we're negative by about 0.25% right now, 25,886. The Dow in the red, off 0.9%. Russell off by 2. You jump over to JP Morgan, down by 4.2%, almost at session lows right now. Yeah, so Netflix, they're going to up their bid, potentially do an all-cash deal. Look at that. They're going Warner Brothers, man. They're not messing around. Warner Brothers right now, ooh, they like that. Cash, please, 1.5%. Yeah, don't give me your stock. Don't give me your crappy stock, Netflix. I kid, right? But that's the deal. You look at the offer in terms of how this equity's traded since they started competing for Warner Brothers. You talk about a pullback, man. They're in it for the long run. They know they can sell the ads. They need the content. I mean, this one reminds me of Google in the beginning when they just acquired YouTube, right? And how it was the easiest decision ever. And this is on a much bigger scale.
But Netflix is a marketing machine. They're going to make more money than ever imaginable with subscription fees. They're going to make them with advertising dollars. And they're going after Warner Brothers, man. They're not messing around. Warner Brothers is benefiting. And on the flip side of that, yeah, the Ellisons. They're going to be going after that one in court. So check this out. Gold. Okay, quite a run. Now, folks, if you're, I have a new issue out of the Gold Report today. Always a great time to check it out. I put a video update yesterday, new update today. You can check that out. Sign up. Comes with a 30-day money-back guarantee. One of the things I said is, put a stop in. If you got to run up to these levels, okay, we're going to have pullbacks here. Eventually, we're going to get who the new Fed chair is. That's an unknown that's hitting the market. I think Powell will be cleared. That's an unknown hitting the market. We'll get the tariff certainty one way or the other. That's hitting the market. We're going to have pullbacks in this market eventually, even on the short term. So get some stops in there because we're going to have more opportunities. Gold's negative by $23. Folks, thanks so much for tuning in. Have a great night. Have a safe night. I appreciate it, folks. We'll